Now. So, hello everyone. Thank you for spending some time with us today. And hello, Charlie. It's so nice to have you here with me today. I'm really thrilled for this opportunity. My name is Cecile Blilious. I'm the head of impact and sustainability at Pitango Venture Fund. We are Israel's largest and oldest venture fund and are integrating the world of impact and sustainability into our investment processes. We have a series called No Filter, which is one of the episodes is today, where we try to provide knowledge and education to the ecosystem about things that we do. And I'm certainly very thrilled to provide that for the sustainability and impact ecosystem. So first of all, welcome, Charlie, and thank you for being here with me today.
Thank you so much, Cecile. I'm so glad to be here, and thank you for the invitation. I'm thrilled to talk to you about impact and everything else that's going to come up.
Wonderful. So just in terms of introduction, just in case you people don't know who Charlie is, and I urge you to look him up because everything I say here is going to be a very small excerpt of things that he's doing. So first and foremost, Charlie is an impact investor. He believes in the fundamental and real meaning of wealth, which is to make a positive contribution to humanity and the planet. He's a leader of the deep impact movement, which is not only treating the symptoms of our failing economic system, but is its root causes. With a level of awareness and consciousness that is non-anthropocentric, acknowledging that humanity is part of the evolutionary process and not outside of it. He sees impact investing not as an intellectual exercise, but as an expression of who he really is. And trust me, I've been following Charlie for the past 15 years or so. Absolutely correct. Charlie and his amazing wife, Lisa, founded KL Felicitas Foundation, Social Impact International. Charlie is at the Central European Investment Ready program, the Hawaii Investment Ready, which helps social entrepreneurs worldwide accelerate and increase their impact. He also co-founded Tonic, a global network for impact investors, and Tonic's 100% network, which we'll talk a little bit about in a moment. A global group of asset owners dedicated to 100% impact, currently representing over 6 billion in assets that are actively moving into impact, which is quite an achievement. Dr. Kleisner serves as a full member of the Club of Rome, as chairman of the board of Impact Assets, on the board of the Schwab Foundation for Social Entrepreneurship and Proof of Impact, and on the advisory board of Chi Impact Capital, Industry Foundation, Setup, MCI Business Schools, and Rainfall. Charlie has over 20 years of experience as a senior technology executive in Silicon Valley. That's a very important point, which we'll refer to later on. Held executive senior engineering management positions at Hewlett-Packard, Next, RightPoint, and Ariba, and has an MSc and PhD in computer science from the University of Technology in Vienna. That's, yes, and that's just a small part of it. So really welcome, Charlie. And
thank you so much. And I wish I could read your CV to make sure that we have a reciprocity here.
Well, being the host, I get the privilege to call the rules here. So we call this session from philosophy, impact philosophy to practice. And I think that you do have both. You are looking at the philosophy behind impact and what is impact investing and why we should do this and what is the purpose of capital and wealth and the responsibility of people with wealth. So let's start with a little bit of your philosophy on impact. As an entrepreneur who started thinking differently about capital and differently about entrepreneurship and innovation, when was it that you came to the understanding that capital should be doing something more than just more capital? And was there like a aha moment, or was it a process? How was it for you?
Yeah, well, it's a process like almost anything in life. And if you go deeper into a topic, then you will see other opportunities as you go in. And that happened to Lisa and I. So we came into wealth in the late 90s and early 2000s from working in Silicon Valley. And and we had to reflect on the meaning of wealth, because if your situation changes within, let's say, 2-3 years, as we diversified the stock that was part of the compensation models in Silicon Valley, then you need to reground yourself in what is it and why is it that it came our way. And usually, after significant liquidity events, partnerships either fall apart because one person wants to be a little bit more self-actualizing and the other one wants to do whatever, more yachts and what have you. And Lisa and I were on the same page, fortunately, and that we were clear that the reason that this wealth came our way is because we wanted to do something meaningful with that, which now is called impact investing, something meaningful for the world, for the planet and humanity. And we think that wealth comes with responsibility, and we cannot possibly leave our values at the door just because it's about investing. And so the beginnings of this journey were quite lonely, because there's not that many people who were on the same page as we were. Even so now, of course, there are, and it's wonderful to see that emergence happening. But at the time, in the early 2000s, we had to fire a couple of advisors, because either they didn't believe us, or they didn't take us seriously, or they just didn't want to embark on that journey with us. So one aspect of why we chose to do that is the personal aspect. And let me just mention the other aspect, because it might play a role in our conversation today. And that's, we are both systems thinkers, right? I have a PhD in computer science, was trained in thinking systemically. And when we looked at the way that philanthropy worked, and that normal capitalism worked, and that the resource consumption worked, we were understanding in the early 2000s that things are not going in the right direction from a systems perspective. And indeed, now with COVID-19, when we look back at what's happening with the major systems of our planet, we see the disruptions of these systems, and COVID-19 shines a light on that. And I would submit that the design of the financial and the economic system, the design constraints and the design flaws actually of those two systems are contributing, if they're not causally related, to the systemic cracks that are showing up. And we know from system science that if a system starts to change, it's almost impossible to put it back into a state that it was before. And I think that our behavior, humanity's behavior with respect to fossil fuels, has now generated the cracks called climate change that are really hard to put back into the box, because that system change is going forward. And similarly, on the social inequality and social justice side, the inequality and the issues from our societal design are now to a point where the system reacts by doing demonstrations, by saying this cannot be sustainable anymore. And so that's the global context, I think, that we're talking about, why it's so important, for the impact economy to emerge. And we both have a responsibility personally, and as systems thinkers, we need to move into that. And maybe we get to talk about consciousness, which is the third aspect of things.
So, but I started my impact career, so to speak, around the same time, early 2000s, and I remember very vividly that when people came to wealth, they basically just allocated more money to philanthropy and kept going with the businesses the same way they did before. And people started to think, like you did, you and Lisa, about creating this middle pocket where it's not philanthropy, but might not have been investments, but it was more like using capital as a resource rather than labeling it into a bucket. That was very unique, and obviously it's not new that to me at least, that you had to let go of some people who really didn't believe you, and actually it's a recurring story for people that had the same mindset. But it must have been really hard to convince, and stand in front of what has always been the way that people dealt with wealth. You just, give it away through a philanthropic vehicle, and you continue with your life on your financial vehicle in the same way. So how was that?
Yeah, so when we looked, you mentioned in my introduction that I worked for Steve Jobs for a number of years. At Next, I was in charge of developing the operating system, which we called OpenStep at the time. And then when Steve took over Apple again, it became System 10 and the basis for iOS. And so it's really, it was a great time for me to work on that. And I wish that Steve would still be around these days, because he would seriously question the status quo of philanthropy, if not earlier, but certainly now in this stage of his life where he's still alive, right? Because he always questioned the status quo. And Bill Gates, of course, like he did his business, is copying what he thinks is great and scaling it up brilliantly. And that's what he does. Now he's scaling up the old way of philanthropy, which clearly does not work. If you say working means that you make a meaningful change with respect to solving the systemic issues of climate change, the systemic issues of inequality, social injustice, and poverty. And so in that sense, I wish we could not possibly just do the old philanthropy, because it contributes, in our opinion, to creating dependencies, to creating corrupt structures, and to not really treat the recipient as a partner in order to go deeper in exploring how you can actually solve the deeper issues behind these problems. And because we are entrepreneurs, it was not that hard for us not to do that, because in my for-profit career, people have always said, the 3 startups that I've been privileged to work with as the CTO or VP of engineering, people always said they will not be successful. I'm used to that. I would be scared if people say what I do will be successful, because that might be a leading indicator that the masses already believe in that, and that is maybe not the right leading indicator at this point in time. The question for me is, how can we help the emergence of an awareness and consciousness amongst the people who want to make a difference in order to actually make a difference?
That's
and that's
actually
not the old way of philanthropy, and not the old way of doing capitalism. It's a new way that's emerging, and we call that deep impact investing.
So actually, this comment is really important for the entrepreneurs on the call and the ones who will be hearing this in the recording later, because being an entrepreneur is hard. And one of the hard things about it is that you keep going against the current and doing things that are different than what other people are used to. And mostly you encounter criticism that what you're doing is actually not going to work and it's not possible. And being a good entrepreneur means really overcoming these difficulties and still going your way because you believe in it. So that's you. But then from that point onwards, you need to convince other people. And thinking about how to organize people with wealth to think about making impact not in the old-fashioned way, but in a different way, setting up Tonic and talking about deep impact and going even further to convince people to manage all of their wealth as 100% impact. So tell us a little bit about that. How does that work? How people react to this? And also a little bit about the pushback and what people are maybe critical or even disappointed about.
Yeah, so thanks for that question, which leads me to just reflecting on what we did. So we knew that the old way of philanthropy was not our way. The old way of maximizing capital at all cost, maximizing our profits at the expense of everybody else, was not the way that we could possibly go. And so we said, well, how does the current system work, right? The financial system. And we checked out the demand side of capital, the supply side of capital, and anything in between. And then technology and enablers like regulations that make up the system, right? And so because we set out to change the existing financial system to an impact financial system, the existing economic system to an impact economic system, where impact is not an add-on to the existing system, but baked into holistically the design of the system. It's not CSR. CSR, corporate social responsibility, normally is an add-on. There's good, maybe some counter examples, but overall, that's what it is, right? And even the theories that were propagated by our advisors and everybody else, so-called modern portfolio theory, has nothing to do with modern. It was invented 73 years ago by a guy called Markowitz, and he even said, let's not use it for systemic change. It's just a way of figuring out how asset classes work vis-a-vis each other. And now it's being used wrongly for actually trying to figure out what market rate returns are, and we return to that to that, I think, later maybe. But so we looked at supply side of capital and demand side of capital. On the supply side of capital, we played not on the institutional capital side, but really in the private capital side. And so when we went around talking about what we invested in and what we do, people got interested, because people with private wealth, they don't want to knowingly make a contribution to mess up the planet. They want to contribute to that, but they don't know how to, at least not when we started, right? Because almost nobody knew how to do that. And so we knew that there was a demand for an organization where we compare notes, where we inspire each other, where we communicate with each other, where we share deals, where we co-invest, and where we educate each other to be stronger vis-a-vis the people who say you cannot do that. And that was the beginning of Tonic. And we created Tonic a year after GIN was created, the Global Impact Investing Network. And GIN was created for the institutional investors. And when we created Tonic, a friend of ours coined that name, inspired by GIN. I called up. Well, it was intended actually.
Yes,
I called up Amit, Amit Puri, who was the CEO of the GIN, and now again is. And said, this is what we're going to do. Are you objecting to this name? Because you should know, right? And she said, no, that's actually quite funny. And we have been partners, ever since, because there's a nice overlap between institutional capital and private capital. And there's a lot of, commonalities between that. But the way that we act is very different. And so Tonic initially was focused on just, was initially focused also globally. Being European myself, living in the US, it was clear to me that we wanted to create a global organization. And now we have about 500 members, and 40% of the members are in North America, and 40% are in Europe, and the rest of 20% is in Asia, all the way from Australia to Singapore to Hong Kong to South Korea and Japan, and Israel. Israel is yes. Great. Yeah. And about maybe 7-8 years ago, it was clear that part of the Tonic membership really wants to go deeper and wants to go 100% in, at least with one portfolio, if not with all of their portfolios. And I helped create the 100% movement initially outside of Tonic, because Tonic was not yet ready to support that. And yet a year later, we folded it back into Tonic, because it was clear that many Tonic members want to go in that direction, and Tonic was able to service that. And that's when we moved to 100%. And I think about half of the Tonic members are 100%ers now. And then half of that now go into Deep Impact, which is the next iteration of going deeper, which I shared before. Once you go on the deep journey, it's a one-way street, and consciousness and awareness leads you down that path. And the Deep Impact Circles, which we created, about 1.5 years ago, now we have 4 going on to 5, are these archetypal unit circles, where we not just talk about our investments, but leading an impactful life and what that means, all the way to our relationship to wealth and what it means to do that, which is quite a vulnerable space to go into as wealth owners. But by having created the trust over years amongst the members, we're able to do that and inspire each other to help us on that journey.
Yeah, it's like when I speak to our companies that are going through this impact migration process and are adopting the world from ESG to the Sustainable Development Goals to impact, sustainability, all this little bit of a soup of the letter soup. I tell them that actually this is about ingraining and embedding it into the DNA of the companies, and not about something that is external to them and to their core abilities and core competence. And I think this also reflects us as human beings. As human beings, we are still the same people. I mean, I'm the same person, whether I, go to work or drive my car or go and have a beer with you or raise my children or whatever it is that I do. I'm still the same human being. So why should my values change or my behavior change from place to place. It should really be something that I carry around with whatever I do. And as a matter of fact, you talk about people in Tonic and in the deep impact circles that are wealth owners, but actually we are all wealth owners. And this is also something that people sometimes don't realize. First of all, we hold wealth through pension funds and other assets that are being managed for us. And we all have a little bit of contribution to make. And I think that we should all treat whatever wealth we have in the same way that we would like to treat society and our planet. And today we can do that. Now, obviously, when you have a larger pool of wealth, it might make a bigger dent, but I think if everybody does that, even on a small scale, that's really a very important message as well.
I couldn't agree more with you, Cecile. And even so, it was true that impact investing was a sport for the wealthy until a few years ago. That's not true anymore at all. You know, we all have bank accounts, and I always urge anybody, including you know, my brother and my sister and students that I talk to ask their bank manager or branch, you know, what they do with the money that they give to their bank, and if they care about what they do. I mean, people say, how do you invest in peace? Well, the first thing that you might want to think about is not investing in weapons, right? And usually most banks do, because you can make a lot of profits doing that these days, particularly these days. And maybe the banks support old coal industry, right? Or old oil industry. And maybe you are not, maybe that's not one of your values. If it's not one of your values, then you should tell the bank not to do that with your money. And because there's alternatives out there now. There's beautiful ethical banks and products out there that go beyond the, you know, the threshold of ESG into deeper, making sure that you actually go and make like a contribution to deeper impact, not just not investing in something, but investing in something positive, right? And I think that is the message that we all should send out as consumers, as investors, and as people living our lives. And we all have a contribution to make on all three accounts.
Absolutely. So which, you know, you're touching on this right now, but thinking about how we mainstream impact. And like you said, it used to be like a game for people with wealth that could actually afford sort of to maybe reduce their returns, their financial returns, in order to achieve maybe impact returns. But this is now the time to really think about the mainstreaming of impact, and the mainstreaming of how impact funds, be it on the capital markets and or on private markets or venture capital as we are, it's challenging. It's not something. I mean, it's very intuitive for people. When I talk about it with people, big entrepreneurs or people in funds, it's very intuitive to them, and they understand why they should do that. But how and why, not why, but how to implement that in order not to relinquish on their financial returns is something that I still see as a challenge. So maybe let's talk a little bit about that. How do we conquer that market? Because this is where the big bucks are. So this is where we really make a dent with our pension money, with our venture money, with everything that we do. How do we penetrate that and convince the big players to start adopting the worlds of impact and sustainability into everything they do? What would be your advice?
Yeah, that you know, without the big capital, Cecile, as you say, the institutional capital, you know, with adopting impact on a meaningful level, everything that we do might not really be the tipping point. It might contribute to a tipping point, but it will not be until they also move. And so where are the leverage points to do that? First of all, I think we need to show and we need to prove to the institutional capital, right, that this can be done, and it can be done with financial returns that are adequate for that particular market, which is debatable what that is, right? And I'll get back to that in a minute. So what we have seen in the last 3, 4, 5 years is an avalanche of institutional capital moving into ESG, right? And that is a good thing. It's a very good thing, because ESG is a lot better than non-ESG. It actually, we just need to improve it in order to make it really successful. So it needs to be improved with respect to norms. So if you look at, me as an investor, and I look at the ESG ratings of different funds and different corporations, I get very different ESG scores depending on who does the scoring, right? Because there's no transparency and there's no agreement on how to do that. So we need to actually do that. And then on top of that, right, ESG is more about how to manage a company successfully towards a better outcome, not only financially, but also with respect to taking into account some constraints on the environmental, social, and governance side. So that's also a good thing. Now, what it doesn't do, having said all these positive things, is if you think that ESG actually goes deep enough to change the financial system, that's not what it does, and it's not designed to do that, right? And so I don't want to diss ESG for something that it's not designed to do. And so let's move on into ESG. Let's make ESG better. We call it ESG plus and ESG plus plus. And measure the financial returns. And right now there's good leading indicators that financial returns of ESG plus plus and ESG are better than non-ESG, so that's good. So that creates more momentum to go into that, while we do on the other side, the design of the post ESG deeper impact side, which actually changes the financial system itself. Because investing into ESG does not change the dynamics with respect to stakeholders. It does not change the dynamics with respect to inequality. All ESG funds usually are designed as LPs and GP structures, or the old financial structures, that make the rich richer and don't really have any contributions to the poor, on that level, except that they talk about E, S, and G, and that's about it. And so I think, for instance, since we are on a financial panel, a technical panel, sorry, that tokenization of impact would be the follow-on, in my opinion, to private equity and the old financial models with respect to creating an infrastructure that is more equitable, that has the potential of involving more of the stakeholders, and that has the potential of providing more liquidity to everybody, and transparency in a way that right now is not possible. So if you look at the private equity investment world, then it's great for technology in order to have financial exits that might or might not contribute to social and environmental impact on a meaningful way, but usually it's not structured that way. And that's why I encourage entrepreneurs and people who are currently on the leading edge of financial in the DeFi environment to actually use this technology, including AI and Internet of Things, to think outside the box beyond the existing structures, and then use that in order to prove impact, in order to show impact, in order to put equity structures around impact, and all the things that financial engineering knows how to do on this new infrastructure. And that's when we move, from comparing ourselves to benchmarks actually that don't include meaningful impact to benchmarks that include meaningful impact. To answer your question, what Lisa and I decided to do 15 years ago to show with our portfolio that we can actually, across all asset classes, generate what they call market rate returns. And we used the benchmarks of the financial industry, not the new industry, the old financial industry, in order to prove that. And we did. 10 years later, Sonnen Capital actually proved in their terminology, that we accomplished that. While we documented with New Philanthropy Capital as an independent validator the impact that we could. And on the impact side, that particular portfolio, if you know the IMP terminology with ABCs, our portfolio was about 49%, almost 50% in the C category, and about 30% in the B category, and a little bit less than 20% in the A category. And with that constraint, we were able to accomplish what they call market rate returns. We since moved beyond that, because now people are copying that and doing that, which is great. It's better than not going 100%. But now what we now see is reverse carve-outs, where 20, 30% of 100% portfolios are actually going deeper, and they relinquish the need to compare themselves to benchmarks that are not meaningful to them, and are embarking on inventing the new benchmarks that would actually be meaningful. To give you one more example before I hand it back to you, let's take the commodities or real assets in our portfolio. What we have to do in order to compare ourselves to the old financial industry is we have to compare our commodities and real assets to a benchmark that actually draws in oil and gas, that draws in gold, that pulls in things that we could never invest in. We invest in renewable energy, we invest in renewable timber, we invest in biodiversity, we invest in clean water, and all of that. And yet we have to compare ourselves to that benchmark. So where is the benchmark that we want to compare ourselves on that? What is the real financial return for an impact risk that we take? And that's the new world. And while we compare ourselves to the old world, I would say, Cecile, that we should move away from the old benchmarking and say, what is the appropriate financial return, in an absolute band structure that you would like to have, given the constraints of liquidity that you have, given the constraints of how deep you want to go into impact, and given how long you want to hold things, right? And so let's say you are interested in education and in health in all over the world, and you expect, whatever, 3% above inflation across the portfolio. What is the portfolio construction to do that? And then you include, 20, 30% outside of the normal portfolio construction, where you have these moonshots. And these moonshots are impact moonshots that would actually also have the potential of generating huge financial gains, right? It's not out of the question. And so we need to think more outside the box with respect to portfolio construction, and outside the box of being constrained only by what they call market rate returns for the portions of the portfolio that we actually do something else with.
Well, ladies and gentlemen, if you're waiting for the philosophy part of the conversation, I think you got it big time. Charlie, you're certainly one of the spearheads and innovators of this financial systems, and the fact that people are starting to talk about it and seeing this as an opportunity and thinking of how to implement that into their own portfolio is really a big credit to you and Lisa. And as a matter of fact, I see this discussion going further and further and more with people. However, mainstreaming impact to me still seems to be, in order to bring the mainstream funds of all sorts, is really to bring them on board with the terminology and the system that they currently know. It's like you said, first you start by achieving at least market rate returns, showing that it can be done, then you carve out gradually into a new systems change and get people organized around that. And here in our strategy, what we do is we also look at the ABC model of the IMP. So we are definitely at avoiding harm as a bare minimum. We work on the ESG structure and methodologies as a baseline. So once we are done with that, at least we know that the companies are inclusive and diverse and or striving to be more and more so, that are conscious of their carbon footprint and reducing it, that they have good corporate governance, and that they're avoiding harm. So that's at the very least, because we don't want to have any companies that actually might harm society. But on top of that, we look at the impact and the link to the sustainable development goals as their impact thesis, and bring the stakeholder management on board, recognize them, identify them, and see what the input, outputs, and outcomes for each of these stakeholders could be, so that the company is really conscious of its stakeholders. So it's really about adopting something that changes the DNA of the companies. And I think that more and more we will be seeing new models that are designing and defining financial success in different ways. And we'll have you to look up to, because somebody always has to clear the path for the rest of us. So that's certainly, I'm thankful for that. So let's talk a little bit about technology. And you're a tech entrepreneur. Your PhD is in computer science. We are a venture capital fund. We support entrepreneurs that build technologies that want to be category leaders, that want to change how things are done, be disruptive. I think that focusing on technology and impact, to me, that's the moonshot, because I don't really believe we can make the SDGs by 2030 without including much more technology than there currently is. Just because of the sheer scale of technology and its ability to address challenges that are everywhere. and global by design. So in my work with startups here in Israel, I'm seeing that the need is certainly there. The request and engagement of entrepreneurs is certainly there. The process is, I think, coming together, and we're doing quite well. We've done it with a bunch of companies already. But somehow I'd like you to talk a little bit more about how you see the role of technology. What are the VCs to do in order to implement this further? Still without revolutionizing the VC or the GPLP system at this point. I know you're you know, it's on the tip of your tongue, and the systems change really is important, but I'm trying to bring in the masses behind us. So how do we do that? How do we convince them, and why, or what would you say to entrepreneurs about building their company and building their product?
Yeah, so let's move into that topic, which is a huge topic, because I think you know, if I reflect on the magnitude of change that needs to happen in the next 10, 20 years, right? It cannot be done without technology. And so it has to play a huge role. And the role of technology can go either way. It can be very destructive or very constructive. And so the question to me then is, how can we align that huge potential, the innovation, and the scale and the speed of change that's happening right now to the good. So about 3 years ago, I thought that I would reinsert myself a little bit into that discussion, because the blockchain and AI discussion has come a long way, in the last 15 years. And I was absent from that because, in my opinion, most people didn't care about impact. And so people then mentioned to me, hey, look, check out the current crop of entrepreneurs. They changed. And so I did. And indeed, many of them are different. You see a lot more diversity. It's not just about Silicon Valley anymore. It's happening all over the world. And Israel is certainly a hotspot, of technology, a beautiful hotspot. And not only there, but also even in Europe, in Berlin, you have now, in other places, you have great entrepreneurs, exploring. And it's very important, particularly for Europe, to step up to that plate, because we're moving to a bipolar world where the US and China will be the main geopolitical powers, right? And it's up to Europe to actually counter that. And I think Europe has a beautiful chance of doing that, because I certainly don't want to be controlled by the Chinese government, and I frankly don't want to be controlled by the big corporations that have their headquarters in the US, right? And so what is that third way that combines high tech, maybe with an ethical way of looking at high tech, at how high tech can be actually utilized in order to make a contribution to the evolving world in that context? And there, it will be necessary for Europe to step on the gas with respect to enabling the entrepreneurial culture, which America is so good at doing, but at the expense of the commons, right? And so if the EU and could enable legislation that actually works, as opposed to impeding progress for entrepreneurs, which is a big if, right? Then that would unleash a wave of innovation. And I do believe that Europe then would have the opportunity to overlay that with an ethical way of looking at things. Let me be more precise about that. The power of artificial intelligence and the power of combining, IoT and robotics and what have you with AI is accelerating and not decelerating. And in order to be at the forefront of this, you need to invest in that. And let's assume that Europe and Israel, would be able to invest in that. My advice would then be that in order to do it differently, that you would start out almost like with where we commit ourselves to contributing these powerful technologies in order to serve humanity, not just itself, right? And by doing that, I've been involved in a few efforts, where we try to be clear about what that means. And some people, and I call it ethical charters. What do you believe in as a company, right? What not just as a person, but a company, I think, especially if it uses this very powerful technology without believing in something and then holding itself accountable through policies and implementation of this, could go astray and just be another Google, another Facebook, another Twitter that don't have these ethical charters. And we know the consequences of this, right? We can observe it right now, what happens. And so another innovation that has to go hand in hand, I think, with that is the governance structures of companies. So I like what's going on in Switzerland with Zug and the blockchain, blockchain stuff that's going on there. And I'm involved in a couple of companies there, including Rainfall and others. Is we have a foundation that actually is in charge of tokenization. It is in charge of developing the economy of the tokens that are impact tokens, right? So you don't have the for-profit company actually being able to print more tokens, just like the central banks do on the real money side, in order to create, what is the side effect, create inflation. So all these have to be taken into account in order not to have impact washing coming along with the new technology. And so that would be, let me stop here because I don't know where you want to go, but I think that combination of technology, the entrepreneurial spirit, the ethical consciousness, if you wish, that Europeans have a greater affinity to, I would say, naturally speaking, than the Europeans and the Chinese, would lead me to believe that that is a huge opportunity, to reinvent capitalism, if you wish, and the way that this token economy and impact economy is financed by leapfrogging. Maybe, let me just make one comment, Cecile, to the old PE environment, but by leapfrogging the old PE environment to actually co-develop the new way of creating this impact tokenization, impact economy, including the technology and the financing that goes hand in hand with it, and the entrepreneurs that actually make it happen.
Okay. Yes. And with that, when you're thinking about new or entrepreneurs that are thinking about new ideas, I'm always trying to figure out how can I make them conscious of their choices and thinking about what they believe in that could be reflected into the product that they're developing or the business that they're developing. And here, I think the opportunities, they're starting to converge. So if you, in the past, when you invented technology, it was technology for the sake of technology, because you could just develop something that would work and maybe do something, whatever. Today, I think entrepreneurs, like you said, they're a different breed and a different generation, and they're not developing technology for the sake of technology, but rather technology for the sake of people, for the sake of purpose, for the sake of the planet. And I think it reflects in whatever they do. But still, I think that they might push back by saying that if they present an idea like this to funds, they might be treated as tree huggers who may not want to maximize their returns, or they might not have good role models to follow and show, who has succeeded in that, and how can they copy that. So I'm trying to look for some practical advice, certainly for early stage entrepreneurs that are building their companies now, and what they should be thinking about when they think about their product, about the problem they're trying to address, how that can be verbalized through the lens of people and the planet. Some real practical things that you think would be helpful for them to build their businesses.
Well, I think that if, for entrepreneurs who are doing something for the impact economy, if they're then ridiculed by the old way of looking at things, they should just not work with them, because they are on the wrong side of history. They're on the wrong side of where things move forward. And there's enough out there now that say, if you are working on topics like regenerative agriculture, like ecotourism, and I'm talking about the big systems, not just how a little village works. No, about the global supply chains and how to reorganize them to make them more resilient, to make them more regional, to make them more, not just more efficient, right? And if you're working on these topics, then I would suspect that you find the right capital to move you along, and the system is catching up to then providing you with the financial return, I think, that is deserved. If you're positioning yourself into a very esoteric corner, right, on the social side, on that side, it's still very difficult to make great returns and to also convince capital to come in, because the market does not agree with us yet that externality will have to be internalized in order, and at that point in time, you will be able to make the appropriate returns. But that, I think that's really and that corner will be reserved for social entrepreneurs. So we need blended capital structures. They will need the different types of capital. If you stay in the 70-80% of the economy that is transforming as we speak, you will be in the sweet spot. And you want to work with finance people who understand that, and not with people who get stuck in the old world. And so make sure that you educate them and say why that is the case. And in this instance, then you have created something that's integrated into your business. As your business scales, your impact will scale, right? It's not an add-on. And that is what impact investors are actually looking for. We're looking for investments that will make a contribution to humanity, that you can articulate, that you can measure, and that you can then create success around that. And that success then will propagate, in the whole for all stakeholders in that sense.
Yep.
If you're trying to raise old venture capital for this new type of enterprise, then you will not be successful. Don't do it. There's enough. Cecile, you're one of them. You're a great example. That there's money out there for entrepreneurs who have a different story to tell. And that story is not just about social and environmental doing good. It's about being part of the new economy that will be successful, including financially successful, right? And that's what you need to position yourself against.
Yeah, absolutely.
Or for, in that matter,
absolutely. Right? All right, I'm going to pause for a minute and look at the chat, because we are seeing some questions.
Improve human beings, I saw there. That's an interesting one.
Yes. So I see that should the overarching goal of technology development be not only to improve the way humanity lives and to make it sustainable, but to improve people as human beings? What do you say to that?
So that's a very good, interesting, deep question. So I think, basically I have to go back to philosophy a little bit, that the impact of our individual lives is an expression of who we really are. The soul. I have a Hawaiian soul on today, not your brain and not your heart.
Well, you have to say to the public here, what is your connection to Hawaii, because you've been talking about this, and you wear the T-shirt. So just say a quick word about Lisa.
That's right. So Hawaii to me means my wife Lisa, my partner in life. Lisa, and my partner in crime for impact, Lisa. So Innsbruck, where I was growing up in Austria, was a little bit too small for me, and so I tried to escape. And they sent me to Maui, Hawaii, in 1974, 75, and surfing was not as important as meeting my life partner Lisa, and we have been partners for in marriage for almost 40 years now, and we do a lot of these impact things together. And so the Hawaiian soul is a reference to the Hawaiian spirit and what comes with it. And Lisa is leading an impact accelerator there for impact entrepreneurs, on that level. And that soul level, even as impact investors, Cecile, if you just invest with our brains, then we never get deep enough on the soul level. If we just invest with our hearts, we will lose all of our money most likely. And if we invest with our soul, then it goes beyond our own ego and really long term beyond our own lifespan, because the soul is what it stands for, right? And so that's really, I think, and so improving yourself can be supported by technology, but you have to do the hard work. If you're not embarking on a mindfulness journey, whatever that means to you, and that could be journaling, it could be reflection, it could be going out in nature, it could be yoga, it could be meditation, it could be shamanism, humanity knows how to do that. You just have to do it. You cannot think about doing it. And if you do it, then you will reap the benefits of that. And so, and you can use technology to do that. There's a beautiful effort in Munich that checks your meditation and has as a proxy, of deep meditation, the way that they analyze your brain waves, and then they give you a token for meditation. Now, it's a little bit too early to have a marketplace around that because our society does not yet take the tokens of meditation seriously, not like Bhutan does, but maybe in the future they do. Just like Alexei, the trajectory of humanity is a direct expression of humanity's consciousness, and right now it doesn't look that great, right? If you look around, the consciousness is what it is, and that's why the rest of my life I try to make a little contribution to elevating the consciousness, such that we demand the politicians that understand and do the things that are necessary, the hard things that are necessary right now in order to avoid catastrophe, right? And it's not too late yet. I see the emergence of these circles and of these consciousness things going on everywhere right now, and that's a leading indicator that we have a chance of not just survival, but hopefully thrival. And that's where human consciousness comes in, and we cannot really improve it with technology. We can support it with technology.
Yeah, actually, I think technology is a very good enabler. Like we said, it's not technology for the sake of technology, but rather for something that is a little bit greater than ourselves. Okay, so I think that we might not have, Alexei, you're asking really large and philosophic questions. I think we might not have time for that, but I will copy the questions and maybe forward them to Charlie. And if you like to maybe think about them and engage in conversation, that might be good for the future. I see here someone saying any SDG we looked at for our business plan turned out to be financially profitable, which really is what I think. I mean, when you build your business and your model around a goal that is described or designed or coded by the UN SDGs, then you actually find that it's really good business. There's no reason to think that it's not. Charlie, you've talked about tokenization, and tokenization. You're even going further with tokenization of privacy, and it's a whole different discussion, which is really amazing, both on the philosophical as well as the practical sides of it. But at the very simplest term of the word, really, if you build your product to address one of the SDGs, there's no reason not to be profitable. It's actually becoming even more and more clear that you can do both.
So I agree, and I want to caution not just to optimize for one SDG at the expense of other SDGs. And so, because you could optimize for decent work and industry in the old paradigm of energy consumption and production, and that will not contribute to anything good, right? Yep. And so just be holistic in nature and say, yes, I can focus on one SDG, but I'm mindful of all the other SDGs. In a speech that I did to UNIDO a couple of years ago, I even said, let's introduce SDG 0, to combine these, the SDG of consciousness that makes it holistic.
Yeah, and, actually, holistic is a key word here.
And Ursula asked about Europe's Green Deal, and I totally agree that Europe's Green Deal, is the first step and goes further than anywhere, including China and the US, of course. And I think the US and China should learn from Europe. And if Europe could just avoid over-regulating and regulating, for efficiency and making it really, enabling the entrepreneurs and getting rid of structures, I mean, all the modern legislation with respect to tokenization is happening outside of Europe, in Switzerland and the UK, right? And so why is that not happening in Europe? It's balkanized still, right? So let's make sure, that the Green Deal also includes the incentive structures for what we just talked about, the impact economy to make it efficient and enable Europe to lead.
So this is a good segue to looking into the future. So how do we make a future that is more impactful, that is more holistic, that really thinks and considers the planet and society as well as profits, and includes technology as a big enabler to make it happen? Let's talk for a few minutes just about how we see the world of measurement and accountability of impact, which is, I think, one of the reasons why we're not scaling fast enough. Speaking a common language and being able to really monitor and be accountable for the impacts that we're doing. What do you think about that in terms of the future outlook of where we're going?
Yeah, it's so important, right? Everybody that we commit to managing impact, and we have made some good progress on that, but we're still not anywhere near where we need to get to. And not surprisingly, because we're talking about impact. Cecile mentioned the terminology of outcomes and outputs and impact itself, right? In a way that's much more complex than the financial industry measures. It's just outputs and financial outputs, and that's it, right? We're trying to get much more systemic in nature, and that will take some time. And I anticipate that there will be 2 or 3, maybe even 4 different frameworks initially, and that's okay, because it's we need diversity before we consolidate, and the time of the evolution is still that it needs to gel. We need to debate it. We need to prove it. We need to show how AI can actually help it, and then learn from it. And so in that sense, at the same time, we need to do it. And I think a combination of quantitative data points, qualitative data points, and stories are important at this point in time. Maybe even will be important forever, because stories without data are stories, and they have a space in human communication, a big one, but not with respect to proving, and not with respect to, you need data to support a story. And I think similarly, data without a story that makes data come alive is AI algorithms are good, but they're not strong enough yet. And arguably, it will take a lot of time for them to include the human story behind that. And then anything in between, right? The qualitative analysis that again goes into supporting technology to move us forward on that. And so I think that Cecile, is also a huge opportunity for technology to actually make a contribution to something that will not go away by AI, not go away by technology for a long time to come, because we're talking about the interpretation of something for humanity, right? And that's I think one abstraction away from algorithms that are designed by humanity.
Yeah, well, so I think one thing that we certainly share, Charlie, is optimism. I'm a relentless optimist. I know you are too. I believe that the future is bright and people will come around, and that we can change and be more holistic about who we are and what we do, and really achieve much more positive impact on our lives, ourselves, and our children's and grandchildren's lives. Let's end this session with an optimistic view. What do you say?
I think now is the time to step up and contribute, right? If not now, when, right? And now is the time, not to be overrun and victimized by trends that are in motion, that are big trends, right? And so let's become the architects and the co-creators of that, Cecile, as you point out, in a way to make a positive contribution. And I'm very energized around, the intergenerational, the diversity of contributors these days. It's not just the old folks. It's not just the men. It's not just the white ones. It's not, it's everybody expressing the desire to not just to contribute to actually, but to actually co-create. And I think that is the call of the day. And I'm so glad we had a chance to discuss that a little bit on your great network here. Thank you.
Thank you very much. So, Charlie, I really want to thank you for this conversation. It's been a real treat for me, and I'm sure for everyone listening and that will listen to the recording. It's always, you have been a role model for me for many years, and you keep doing that. So I'm really happy to adopt you as my role model. And thank you for sharing your thoughts and philosophy and your practical approach, and for being who you are, you and Lisa, and doing what you do and being such a leader in this market. Thank you very much.
Thank you.
Thank you everyone for participating and sending your questions. Thank you.